The S&P 500 gapped up. There was strength in the NASDAQ 100, and then the Russell 2000 was showing weakness like I said it would. So in today's video, we're going to take a look at everything in the market. We're going to take a look at all of the indices, the dollar, the VIX, and the bonds. So without further ado, let's get started with the video. So first things first, let's go ahead and take a look at the percentage gains and losses for each of the indices today. So the IWM was the biggest loser, the NASDAQ was the biggest winner, and the strength in the NASDAQ helped pull the SPY up. So essentially we can see that the SPY closed above this range here at 428. And I was essentially saying that the Russell 2000 was showing a lot of overextension to the upside. And I was saying that it made way more sense to be bearish on the Russell 2000 here because the strength would not be able to sustain itself. And we've seen time and time again in multiple instances in history where when the Russell is trading this far overextended to the upside in terms of the Bollinger Band, it shows extreme overextension. And when something is extremely overextended to the upside, it needs to reverse down. So what I was saying was to go short the Russell and to go long tech because money was going to flow out of the Russell and back into tech. Basically, that's exactly what ended up happening. The Russell, I mean, it's just textbook to be bearish when things are this overextended to the upside, time and time again on the SPY, the NASDAQ, or the IWM. When we're trading like this, when we have multiple opens and closes outside of the upper or the lower level of the Bollinger Band, we always tend to reverse back inside in the opposite direction. So extreme moves like this cannot sustain themselves. And once again, I'm going to explain that the Bollinger Band is 2 standard deviations away from the median line. The median line is the 20 exponential moving average. So when you're that far overextended in either direction, we need a reversal. So the IWM, boom, worked out. I said that 185 was going to be a target to the downside. We hit 185 perfectly. We ended up having a low of 184.45 today. And I still think that there still could be more room to go to the downside. 184.80 is clearly a major level of support here. This is the 50% Fibonacci level from back in December to the highs here in February. So you can see this level is acting as perfect support currently on the IWM. And when taking a look at the NASDAQ, obviously I was saying that this big red candle was not an automatic reason to go short because we fell to a level of support. And I was saying that 348, 346, and 344 were major levels of support on the NASDAQ. And after seeing this much weakness on the NASDAQ, I knew that going long on the NASDAQ and short on the Russell was going to be the play. And that's essentially what ended up happening. Because the NASDAQ was showing this much strength, it helped pull the SPY up. So currently on the SPY, we got a nice solid close above this level of resistance here at 428.90, 429 level. We finally got a close above it. So now, where are we going to go? So essentially the levels on the SPY moving forward, 430, and then the main level of resistance now is going to be this 437.68 level. That is going to be, that is a very major level of resistance, and there isn't really that much in between here. Okay, so if we are going to make a move to the upside, it can happen very quickly. But what we need to monitor are we need to monitor how the strength in the NASDAQ can continue. The strength in the NASDAQ is going to be a very big factor as to whether or not the SPY is going to continue up. So what we're seeing right now is obviously the NASDAQ is holding support, breaking above levels of resistance, closing above levels of resistance. We need to see it make a new high heading into next week, or else this is starting to show an indecision candle at a level of resistance. This isn't what you want to see for a continued move up. You would rather see a nice solid green candle into a level of resistance for a continued move up, not a doji. Okay, so essentially the NASDAQ just needs to break and close above 357.50, 358, as a comfortable level of resistance to continue moving up. Then once the NASDAQ can close and show that strength, then I think the SPY can comfortably break above 430, 431. We can retest 435, but that is just the SPY and the NASDAQ. On the IWM, I'm not expecting, we should be breaking below 184, and we should come back and retest this 183 to 182 level. To be honest, that would be something that I'm expecting. What we can do to further look at this is we could take a fib level from the recent lows to the recent highs, and we can see that at 23.6% fib, we haven't even come and retested that level yet. But in general, it makes sense to come and retest the 38.2% fib, which again is even below 182, 183. That's at 180, 188. And a retest of the 38.2% fib is a healthy retest. So now the question is, how long is it going to take to get a pullback? Are we going to maintain above this 184.13 level? If we hold above the 23.6% fib at 184.13 and just skyrocket off of this, that's going to be very, very bullish. But generally, we should get at least a touch to this level. And there's also a high likelihood that we should break between and test somewhere in between this area, this zone between the 23.6 and the 38.2. That's my assessment on the IWM. But now to get a full assessment on where the SPY is going to go, let's take a look at the VIX and the dollar. All right, so the VIX is looking garbage. We know that the VIX has an inverse relationship to the market. If the VIX is falling, then that means that the stock market is doing really well. And currently the VIX looks trash. We could see that the MACD is moving up very sensitively while the price of the VIX is continuing to fall. So this MACD is curling up, but the price of the VIX is falling. So that is really, really bearish. And that's very, very bad. What we need to see is the VIX needs to start closing above major levels of resistance for this to make sense. For this MACD to make sense, we need the VIX to close above 1450 or $15 ASAP. Or this MACD is basically like, what is happening here? What's going on right now is signaling extreme weakness in the VIX. When we do have extreme weakness, when it shows extreme weakness, that's generally a time where it doesn't continue. But we need to see, because another thing is that also the Bollinger Bands are in free fall. So with the Bollinger Bands just pointed straight down like this, that means that the VIX can continue to fall lower. And as the VIX continues to fall lower, it can basically continue falling lower without ever falling outside of the lower level of the Bollinger Band, without ever having to even be overextended to the downside. So that is really, really bearish. There's a lot more room to fall on the VIX. But when things look this bearish, it's tough to take on the trade because it looks really, really obvious that this is very, very bearish. So just keep that in mind. Just keep that in mind. It's interesting that this is happening on the VIX because we have like a sort of indecision reversal candle on the SPY. Now, this could be like a top, right? It's not a guarantee that this is a top, but when the SPY is basically making a bit of a reversal candle at resistance, and when the VIX is showing some sort of support, it could mean that the SPY is going to fall, and obviously that also means that the VIX is going to bounce. Now, I'm not saying that it's going to be a huge reversal that we're going to give back all of the gains, but it's something to take into consideration because the IWM is also showing weakness. And the IWM also played a part in the reason why the SPY was showing this much strength. So the VIX is showing some sort of support and extreme downside potential. The SPY is showing a lot of strength and a bit of a topping formation. All right, so there's that for the VIX. Next, let's go ahead and take a look at the dollar. All right, so the dollar, we also know, is an inverse relationship to the market, very similar to the VIX. If the dollar is doing well, that means that the SPY or the stock market should not be doing well. So the dollar clearly showing strength. And at the moment, the dollar looks like it found some sort of a support. Obviously, this is still not a bullish setup. We still could not even close above the 50% of this red candle. So it's not, you know, it doesn't, this green candle that we have isn't automatically bullish. So we need to see a nice close above the 786% of this red candle for a bullish move. But the dollar is showing support. And with the dollar showing support like this, with the VIX also showing support, and with the SPY showing a bit of a top, with the NASDAQ, you know, with the NASDAQ failing to close above levels of resistance, and with the IWM showing weakness like this, you know, just be careful about being extremely, extremely bullish. You know, but if you were to be bullish about something, you know, you could trade either way. In this market environment, honestly, you can trade either way. As long as you're going long at support and you're going short at levels of resistance, managing your risk, there's money to be made either way. Even if you're completely wrong about the trend. As long as you are managing your risk properly, as long as you are managing your portfolio properly, as long as you have stop losses in place, you can make money in either direction in this market. And yeah, I hope I am helping you guys in understanding what my thoughts are. I hope I did a good job explaining everything. If you enjoyed the content and you found some value out of this, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early on Monday morning, where I live stream and live trade every day. All right, so I'll see you guys. Take care.